Welcome back. In this special report, banks are stealing your Bitcoin. We're going to be exploring this thesis that one user and crypto expert named Simon Dixon is throwing out there, that banks and the financial institutions are stealing your Bitcoin. And they're utilizing the Bitcoin ETFs, MicroStrategy, GameStop, all these major companies that are buying massive quantities of Bitcoin and then letting you buy their shares of their stock to hold portions of the Bitcoin. But at the end of the day, is that actually holding Bitcoin? As we've discussed with the MicroStrategy trade, Michael Saylor believes that their thesis is going to effectively, continue to grow the valuation of MicroStrategy, and effectively MicroStrategy is going to be the first holding company of Bitcoin. This is going to be their major thesis, their major strategy. But at the end of the day, I've explained that there is extensive risk in what they are doing. And while the majority of the crypto industry is cheering this on, there are users and there are experts in the crypto ecosystem that believe that this is actually a net negative for crypto. And this potentially goes in line with why some influencers and some YouTubers here believe that this is the final cycle, or the final real cycle of crypto, because of all of these other products that are being built with centralized bank and company corporate control. And therefore, if the banks don't bank you as a company, you can't do business with them. And so these corporations that are buying Bitcoin and these companies that are buying Bitcoin, they do have the blessing from the banks. But the banks just a few years ago were saying that crypto was fraud, manipulated, and not real money and has no value, including the likes of JP Morgan and some of the other big banks as well. Why are they now getting involved in Bitcoin? Why are they now investing in Bitcoin? And why are they now cheering on these Bitcoin reserve thesis and strategies like MicroStrategy? Well, Simon Dixon explains a little bit about the risk profile here and how the banks are taking it over. And what we're going to be doing is looking at one of his recent videos and kind of reacting to what he's saying and see, are the banks actually stealing your Bitcoin? Don't forget to give this video a free thumbs up, hit that subscribe button. That way you never miss a new video. We upload almost every single day of the year to bring you the latest happening in the financial world. If you like this kind of content, check out my other videos, and also think about becoming a subscriber and also a channel member by clicking join down below here on YouTube. So starting out, Simon Dixon was, I think, very involved with some of the issues that happened during the last cycle with the FTX collapse and all of that. Well, he's saying now, don't let MicroStrategy and Cantor Fitzgerald steal your Bitcoin. Now, we know Cantor Equity Partners is a company that was basically started, and they're going to be merging into another company that's going to be a Bitcoin strategy company similar to MicroStrategy. We'll get to that in just a few minutes. And so this is in response to a tweet that said, I tried listening for a rational explanation, but it never came. Seems to be based upon leverage, but he seems not to realize strategy are very under leveraged. Well, Simon Dixon said, you can't approach MicroStrategy in isolation, nor can you rely on its existing form. What we may be witnessing is a 2-year playbook quietly constructed by investment banks and hedge funds. I know how they think, he says. I was one of them before leaving investment banking in 2006. Banks build leverage patiently, laying the groundwork across multiple fronts before the game fully reveals itself. You have been warned. And so he put up this video saying, don't let MicroStrategy and Cantor steal your Bitcoin. And we're going to listen to a piece of this so that you can understand really what his thesis is about, the banks taking control. And this is not a surprise, guys. I mean, once BlackRock started getting involved in Bitcoin, we knew everybody else was going to start getting involved in it as well. But the bigger question is, why are the banks getting involved, right? Why is JP Morgan saying, well, Bitcoin is fake, it's not real money, nobody really likes it? Meanwhile, there's clearly a huge population around the world. And even in the US, like 70 million people own or have traded in Bitcoin and crypto. And so saying that nobody is investing in this is just an utter lie. And meanwhile, while JP Morgan was saying that, JP Morgan was creating their own blockchain. They created their own coin called JPM coin, and they were getting heavily involved in the development and funding of Ethereum through consensus. And so it's like, watch what they do, not necessarily what they say. And now Simon Dixon believes that the banks are utilizing these other ecosystems like the Bitcoin ETF, like MicroStrategy, to basically take over the crypto ecosystem. And not only just take over the ecosystem, steal your Bitcoin while they get rich and you get poorer. Let's listen to what Simon says here. Hey, that's interesting, Simon says. By the way, don't forget to give this video a free thumbs up, and thanks to Simon for putting out this content that we can kind of go back and react to and understand, is this accurate? And by the way, this is like a 50-minute video. We're not going to watch the whole thing. We're just watching pieces of it. Let's listen in.
So anyway, now the banks can have Bitcoin on their balance sheet. And thanks to the Trump administration, it's not even going to be off balance sheet. It's not going to be a custody relationship. It's going to be stick it on your balance sheet and lever up. Lever up. So now we've got the primary dealers of the Federal Reserve activated. We've got the technocrats and the Trump administration that are all launching their stable coins. We've got the banks that are all going to be launching their stable coins, rinsing as much of that yield as they can. We've got all of these different players that are setting up their Bitcoin mining companies. Now, thankfully, this is just America. Bitcoin's a global play. You know, there's only about 40% of the hash rate in America. They can go lever up and play their debt-based Ponzi scheme games. But in the other parts of the world that don't have debt-based Ponzi schemes, that still have sovereignty, that still reinvest into their people and their infrastructure, they're also mining Bitcoin. They're also using this the way that it was designed, without creating a debt-based Ponzi scheme on top of it, and you can opt out. And that's the point. You can opt out. You don't need to play their game. That's the way this was designed. Because of course they are setting up an almighty pump and dump. And this time it's not going to be a dump, because they want your Bitcoin, because they know what's happening to the proof of weapons network, because they are the same people that own the politicians, that own all the stocks, their positions in all the stocks, that control the capital flows, that know that they are asset stripping Americans, that know that they are asset stripping Europeans, that know that they are asset stripping Brits. And they know that stablecoins is their mechanism for getting the final bag holders in America, your pension, to hold the bag because no one else abroad wants it, because there is a strategy of multipolarity being executed as we speak.
Now, I'm going to pause right here because what he's saying does make a lot of sense. Like if you look at other countries that are buying Bitcoin, they're buying it not with debt, right? If you look at like El Salvador, even if you look at Bhutan, Bhutan has been mining Bitcoin. And we just heard recently that Bhutan, based on Arkham Intelligence tagged wallets, it appears that Bhutan's Bitcoin holdings have decreased by about 40 to 50% over the last year. Now, some people would say, well, why are they selling their Bitcoin? It's like, well, why are they mining Bitcoin? They're not just mining Bitcoin to hold the Bitcoin. They're mining Bitcoin to make money, to make their people prosper, pay salaries, create jobs, all this other stuff. And so this idea that MicroStrategy has of just holding the Bitcoin forever, guys, this is not a thesis for investors, right? For me, granted, I hold a very small portion of MicroStrategy, but this is more of a hedge, right? Otherwise, there's people who are 100% in MicroStrategy. There's people who are 100% in MicroStrategy derivatives. These are products built on products built on products, and you're so far removed from Bitcoin. When I look at MicroStrategy and their thesis here, this is not about MicroStrategy making their shareholders richer. It isn't, because that's not what they're doing. What they're doing is they're accumulating Bitcoin with debt. They're creating risk, but they're creating risk in MicroStrategy, not Bitcoin. Because at the end of the day, Bitcoin can fall, right, from a price perspective, but the thesis around Bitcoin will always remain the same. It's not changing based on MicroStrategy being over-levered or having to liquidate or whatever the situation may be. But MicroStrategy is buying this with debt, right? They're basically shorting the dollar and longing Bitcoin at the same time in the same trade. Now, is this going to work out? I don't know. But as we've talked about, the digital dollar is the stable coins. There is going to be no CBDC. Jerome Powell at the Federal Reserve, they don't need to create a CBDC because they already have them. They have Tether and USDC. And these are they are the digital dollar. And what Simon Dixon is talking about here is that they're trying to convert the dollars, like what we know of dollars, into digital dollars. And this is going to take time. This can take 10 years, maybe even longer. But we're in the midst of it, right? We're seeing more and more push into stable coins, more and more regulation into stable coins, more and more protection in stable coins. And the reason, based on what Simon is saying, is that they are doing this because people around the world, countries around the world, are dumping the dollar and dollar-denominated assets. We know that they're doing this. We see it in the markets. We see it in the charts. We see it in the data. And so if they can convert everybody to this new digital dollar, and have the pension funds hold this and retirement funds hold this, right? They're picking up the bag, right? They're the ones being left holding the bag because all these other countries are dumping the dollar for, the yuan or other currencies or gold or crypto. And who's left holding the bag of dollars? I mean, it's the same thing in crypto, right? We can keep going higher and the valuation of the coin can keep going higher and higher until it doesn't. When it doesn't, and we're in a bear market, what happens? The bag holders are pissed off, and the people who sold their bags, they're living in a mansion on a beach, right? So let's continue listening to Simon Dixon. And again, his thesis is that the banks are doing this by design. That this is not just like, oh, we accidentally had a big crash in the markets. No, he's saying that they're going to do this on purpose, and they're setting this up. And it's not just through leverage; it's through many different angles. Let's listen to what he says.
And so what else did we get as an announcement? Well, Tether, the one that became more profitable than Citibank by issuing a stable coin and using it to buy Bitcoin with the yield that the government pays, they're going to be doing a partnership with SoftBank. Who's SoftBank? SoftBank, the private equity fund, the hedge fund that gains access to the Bank of Japan. Bank of Japan, the proxy central bank that was set up after World War II in order to rinse money from the Japanese people, in order to accelerate assets and then borrow at 0%, hedge out the currency risk so that you can create derivatives with Goldman Sachs and JP Morgan. And then you can use that in order to pump up the stocks. And then you can pump up the price of stocks so that executives can meet their bonus option schemes. And then they can use that in order to extract more value out of their stocks. And then they can use that in order to borrow at 0% from the Federal Reserve, from the Bank of Japan, so that they can then speculate and at the same time short the stocks when they need to hedge against anything that goes wrong. This is how the system is set up. And you're being told that this is capitalism. No, this is the Federal Reserve, crony capitalist, unfree market. 30% of your GDP is government expenditure.
Now I'm going to pause right here for 1 second, because the point that he's making here, I actually think is fairly accurate. I mean, even if you just think about MicroStrategy, okay, there are a lot of people who are quote unquote irresponsibly long MicroStrategy. There's even a group on social media called Irresponsibly Long MSTR, and people are 100% in this stock. And my question to these people is always, well, why are you holding the stock instead of holding Bitcoin, right? It's the same thing. Look at the savior, Michael Saylor. He holds 0, and you can go look it up yourself. It's public. Go to NASDAQ.com, type in MicroStrategy, click on insider activity, and you'll see how many shares Michael Saylor owns of MicroStrategy. Guess how many he owns? 0 shares. He's sold all his shares over the last few years. And so while people are cheering this on, my question is, wait, the CEO and founder, the spokesperson for this whole Bitcoin thesis, he's not even holding MicroStrategy. He's holding Bitcoin. Why? Because the Bitcoin has the value. MicroStrategy only has value because they have Bitcoin. And so he obviously sees that there's risk. He knows that he's going to continue to dilute the MicroStrategy stock. He knows that Bitcoin is the answer. It's not all of these other products and derivatives built on top of it. Very interesting dynamic here, guys. Let's continue listening in.
China's at 47%. You're only 17% away. And yet they're the evil communists. And you're the capitalists that believe in everything, the good of the world. So anyway, Tether, SoftBank, access to the Bank of Japan carry trade. And Jack Mallers, a Bitcoin guy who they just plastered in. I'm sorry, Jack. You worked with us on the El Salvador strategy. I appreciate your work up to this date. But either you are swimming with sharks now. You are full blown in the Federal Reserve System. This is like a mafia. You are deep state now. You're no longer a Bitcoiner. You can paste your Bitcoin narrative on top of it, but you have sold your soul. Once you go in those circles, it's like, just when I thought I was out, they pulled me back in. You never leave. The deep state mafiosa network. This is as deep state as it gets, because who are you working with? Cantor Fitzgerald, Howard Lutnick. And they're launching a company called 21. And what is 21 doing? 21 is essentially taking money from SoftBank, money from Tether, money from Cantor Fitzgerald, and building a new public company to compete with Strategy that will have access to Cantor Fitzgerald's financial weapons of mass destruction, that will be a Bitcoin native company. And they're going to be doing the tool that they usually do, a SPAC, which is where you reverse the assets into an existing public company. And then you do some financial engineering in order to revalue the company. And then you revalue the company, you put some Bitcoin in. So they're going to be putting, and then you find some kind of business to do. What business do you think they're going to be doing? Probably working with Cantor in order to become a SPAC company that will get as much Bitcoin in this honeypot and network that they're creating to try and trick you out of your Bitcoin so that you put your Bitcoin with them and borrow against it. And then they're going to be partnering with counter equity partners, and they're putting 42,000 Bitcoin into it initially, reverse engineering it into a SPAC, and they are now engineering the stablecoin strategies as well at the same time.
Now I'm going to pause right here for 1 second, because effectively what he's saying is they're effectively, these other companies, SoftBank and all this, Tether, they're giving 42,000 Bitcoin to start this company. That's their kind of like seed investment, I guess you could call it. But then they're going to get shares of the new company. I think the lockup period is about 6 months. But after that 6 months, the shareholders can sell all this stock on the market. So effectively, they're reconverting their Bitcoin into dollars or into another asset that's one step removed from the Bitcoin, and effectively cashing out. And what we see happening with Cantor Equity Partners, this is the pre-merged company, right? It's already at $48, $50, right? And if you look at just a month ago, it was at $10, right? And so the valuation of the new company called 21 is valuing Cantor Equity Partners at about $10 to $15. I think it's about $12 at the new valuation of the company. But a lot of people who are uninformed or underinformed, they're looking at the market cap of Cantor Equity Partners and saying, well, it's only $600 million. The new company is going to be worth $3.5 billion or $4.5 billion. So this price should go up 10x. But no, the Cantor Equity Partners, the shareholders of this company, are only getting 2.3% of the new company. 2.3% of the new company, or 2.7% of the new company, is about $10 at current prices here. And so you have people investing in this, and they're going to get fleeced, right? With the idea that, oh, this is a good play because they're going to be buying Bitcoin. But guys, again, this share is only worth $10 right now, maybe $12. And it's trading for $47. So after the convert in the new company, these shareholders are going to be diluted significantly from a valuation perspective. And so if they just put their money in Bitcoin, they would have been better off. And so effectively, yes, there is a lot of risk in these products, guys. And there's a lot of, people cheering on GameStop. Oh, GameStop has $1.5 billion. They're going to buy Bitcoin. Yeah, let's cheer this on. Let's cheer this on. It's like, wait a minute. GameStop buying Bitcoin may be a good thing for a short-term price movement. But guess what? GameStop is doing this as a last-ditch effort. Their business model has failed. Retail stores to sell video games that you can buy through the console is no longer a viable business. That's why GameStop is doing this. It's a last-ditch effort. Their business model has failed. This is like Blockbuster buying Bitcoin to save their business. They're not changing their business strategy, and GameStop hasn't changed their business strategy over the last few years. They haven't tried to incorporate new business lines or new kind of business categories to gain more market share. They just let's just do the same thing. So them buying Bitcoin is not going to change that. And so everybody cheering this on, let's buy GameStop because they're going to buy $1.5 billion in Bitcoin. And yeah, what happens if the company goes bankrupt? They owe debt. They owe lenders money. Guess who gets the money first? The lenders, not you as a shareholder. And what are they going to do if the company goes bankrupt? They're going to liquidate all the Bitcoin that they have, probably at much lower prices. So if you have $1.5 billion worth of Bitcoin getting liquidated at lower prices, guess what's going to happen to the price of Bitcoin? Drop. Guess what's going to happen to the shareholders of the company? Lose all their value. And by the way, this could happen to MicroStrategy as well. I mean, MicroStrategy's dollar cost average is very high. But let's say they're totally fine. There's no risk, whatever. We're going to make it through 3 more cycles with MicroStrategy doing this. It still doesn't take away the fact that the banks are in control. And why are you holding MicroStrategy instead of just holding the Bitcoin? If you believe in the Bitcoin thesis, if you believe in the MicroStrategy thesis, you should just be holding the Bitcoin, not MicroStrategy, as their CEO and founder, Michael Saylor, is doing himself. Let's continue listening in.
What's happening with the stablecoin regulation? Well, it says we would like a 2 years head start where we don't compete with DeFi. And on those stablecoins, we want the stablecoin issuer to keep the yield. They're not allowed to pass the yield on. Why do they want that? Because they are using these financial weapons of mass destruction in order to get as many dollars from you so that they can lend it to the government. The government pays them yield and they can buy the Bitcoin. They are shorting the dollar and going long Bitcoin for as many as they want. And they're making it where the yield cannot be passed on. So they won't allow you to receive the yield. And then you take that yield and you buy Bitcoin. We're going to have to construct financial products. The stablecoin issuers, which are all around the Trump administration, all of the banks, all of the technocrats, all of those that pay, they're going to be shorting the dollar while they pretend that they're making America great again. This is exactly what happened to Europe when the ECB was created and the European Union was created. This is a takeover bid by technocracy in order to asset strip while it transitions to a multipolar world.
Very interesting, guys, because it does make sense. I mean, think about what the banks do. They say, give us your money, we'll hold it, we'll protect it, and we'll give you 0.001%. Meanwhile, they're making 30% off the poor person who just keeps swiping their credit card because they're living paycheck to paycheck. And so that's exactly what they're doing, right? They're stripping some of the ability of you being able to buy Bitcoin, buy into this asset class, right? Because the big money, they want to do this. So they're not going to give you yield. They want the money so that they can reinvest it or they can give it back to their investors and shareholders. They're not giving you any interest. I mean, Coinbase is doing that right now, but if what Simon is saying is accurate and the stablecoin legislation doesn't allow them to pass the yield on to you, guess what they're doing? They're buying more Bitcoin with it. They're going to keep growing their pot effectively with your money that you're loaning them through the USDC conversion. And this is underway right now. Let's continue listening in.
They are creating the honeypot to short the dollar, go long Bitcoin, and then they create the financial weapons of mass destruction to deceive you out of your Bitcoin so that you borrow against your Bitcoin in order to try and get some dollars so they can then do exactly what they did last time, hiked rates, said inflation was transitory, created a series of events that then crashed the Three Arrows Capital hedge fund, that then crashed the Alameda Capital, whatever it's called, Alameda Research hedge fund, that was connected to stealing people's Bitcoin in FTX. And those hedge funds were borrowing that money from Celsius, from Voyager, from BlockFi, so that retail and pensioners had the exposure, and then they left a scamming, lying piece of shit, Alex Majinski, who would then go to YouTube every week and say, this is the safest place for your money. Borrow against your Bitcoin so that you don't need to pay tax, so that you can empty out your pension. I'll invest it in stable coins, and this is safer than a bank. And then all of that cascading liquidation sent the price of Bitcoin down to $17,000 from a peak of $69,000. And what did they do? They put the company in bankruptcy on the very date when Bitcoin is at its lowest, because when you go into Chapter 11 bankruptcy, you get to not owe them the Bitcoin, you owe them the dollar value of the Bitcoin. So you crash the price of Bitcoin, send the company bankrupt, put it into Chapter 11, mark the Bitcoin to market at $17,000, and then you take as long as possible. FTX stole $1 billion from client money. The lawyers at Celsius stole about $400 million. You take 2 years playing that game. Meanwhile, the price of Bitcoin recovers, and then you say, right, I'm going to sell the Bitcoin, give you your dollar value back, and then we get to keep all the upside of the Bitcoin.
And this actually did happen, right? There were a lot of companies like Gemini Cryptocurrency Exchange that was lending, customers would lend their money to Genesis Trading, which ended up going down. And Gemini Crypto Exchange, I believe working with the New York state regulators, were able to get in-kind redemptions back. So if you had 1 Bitcoin in the lend product that you lost, you would get 1 Bitcoin back versus the dollar version of that from the time of the bankruptcy. Because what Simon is saying is accurate. Think about FTX. Sam Bankman continues to say, right? He just did a recent interview and he said that he did not want the company to go into bankruptcy because he believed that the company would be able to recover the funds. Now, listen, whether that is true or not, I don't know. But FTX did recover a lot of crypto, billions and billions of dollars in crypto. But again, what Simon is saying, if this is accurate, they effectively filed bankruptcy at the bottom of the market in 2022. And Sam said, even after he's like, I didn't want to sign the paperwork because I didn't think this was the right thing to do in terms of sign the bankruptcy. But maybe they were having him sign the bankruptcy because, again, it was at the lowest possible price. And after the bankruptcy, they only have to give you the price at bankruptcy, not after that. And that is, it's definitely an interesting thesis and theory. And the thing with MicroStrategy is if you're holding the stock and they have to liquidate or they go bankrupt in any situation, the creditors, the debtors, the creditors, not the debtors, the creditors, the people who created the debt for the company, they're going to be the first to get paid back. And you as a shareholder typically are the last to get paid back. And so that is a risk. If you're putting your money in MicroStrategy and something goes wrong with MicroStrategy, even not having to do with MicroStrategy, it could be other companies or other leverage products that create the downturn. What would happen to MicroStrategy? What would happen to your entire life savings? Again, Michael Saylor doesn't even want the risk because he's not even in MicroStrategy. He's in Bitcoin. That's it. And so this is something that we definitely have to look at and understand, from a risk profile. Vivek posted this on X, not Vivek Ramaswamy, Vivek for real, who is a Bitcoin tweeter. He said, Michael Saylor explains why $100 billion MicroStrategy is valued higher than Bitcoin they hold. This is a must watch for every critic. Now, I'm not going to watch the whole thing because it's 17 minutes, but it says, why does MicroStrategy trade at a multiple of the Bitcoin NAV? MicroStrategy has a compliance advantage over Bitcoin and Bitcoin ETFs for many investors. What is that? MicroStrategy has a credit advantage over Bitcoin and Bitcoin ETFs with many lenders. That's not an advantage necessarily. That could also be a negative because now you have to pay back all these people money. Versus Bitcoin, just buying Bitcoin, you don't have to do that. It's your Bitcoin, right? Think about that. When we're going over all these points, you don't need to have a compliance advantage over Bitcoin. You just hold the Bitcoin. You don't need a credit advantage over Bitcoin ETFs if you're just holding the Bitcoin. You don't need to worry about higher volatility than Bitcoin. MicroStrategy has higher volatility, resulting in a larger, deeper, and richer options market. Well, if you're not dealing with the options market and you're just dealing with Bitcoin, then you don't have to worry about that either. MicroStrategy offers a higher, simple annualized interest rate than Bitcoin for those selling volatility. Again, if I'm holding Bitcoin, I don't necessarily need to worry about the interest rate. Two other products, these are they're covered call option strategies that provide monthly dividends, attract capital by making it easier for investors to monetize volatility. These attract capital by providing a safer, more convenient way to leverage Bitcoin. These are 2x long 2x long MicroStrategy ETFs. MicroStrategy has convertible bonds that attract capital from a new class of arbitrageurs, and hedge funds. So he's basically telling you that you can make more money, and that's why MicroStrategy trades at a multiple. But again, more risk, more reward. So yeah, you may be getting a multiple, a higher reward, but you're also increasing your risk, right? You have all these 2x long and 2x short products. That's a problem. You have these dividend products that are basically selling derivatives, the options on the open market to hedge or to trade or to gamble against MicroStrategy and what they're doing. But all these other things don't really have any benefit to just holding the actual Bitcoin. And I'm surprised nobody has asked Michael Saylor this. Well, Michael Saylor, if you believe that MicroStrategy has the premier thesis, why are you not holding any MicroStrategy stock anymore and only holding the Bitcoin? Because essentially, to me as an investor, that tells me the CEO believes in the Bitcoin strategy, not the MicroStrategy strategy. Because if he did, he would at least have some of the stock. He doesn't have any of it. People are missing this big time, big time. And listen, I'm not saying you can definitely make money on MicroStrategy. Definitely. And all these products listed here, go look them up. You can definitely make money on these. But there's a lot of risk. And that's what we're talking about, right? The banks are making you feel comfortable. Oh, just go buy MicroStrategy. Like, we're going to help them get all this money, right? Because think about it, like, where are they getting all this money that they're creating from all this debt? Who wants to take that leverage play on MicroStrategy that way, right? Because a regular investor, again, they're just going to buy the Bitcoin. So who's doing all this? I would imagine the banks are involved at some level. And so again, they're making everybody, oh, don't worry, everything is totally good with MicroStrategy. You have all these other products that you can make a lot of money on, and you can. But at some point, based on what Simon Dixon is explaining here, at some point, they're going to pull that plug. They're going to raise interest rates so they can't buy more. That's going to push stock prices down, right? Stock prices go down. People no longer want to buy into the stock. That pushes the price even lower. Then you get liquidations. That pushes the price even lower. And this is how we end up in a bear market. Same thing happened with 3 Hours Capital. Same thing happened with BlockFi. Same thing happened with Celsius. Same thing happened with Terra Luna. Same thing happened with FTX. And they happened at different times, but we have to be able to identify, why is this going on, right? Were the banks involved in some of these, allowing all of this over leverage in the crypto market? That way they could pull it back down. Maybe, maybe not. I don't know. But effectively, Simon Dixon responded to this and said, if a large financial institution or even the US government offers to buy all of the MicroStrategy shares at a premium to market value, I see nothing wrong with that. But here's the deal, guys. The US government is not buying MicroStrategy. I think some people believe that what Simon Dixon is saying here is that they're buying, MicroStrategy is buying all this Bitcoin. The Bitcoin ETFs are buying all this Bitcoin so that effectively in the future, the US government will come in and buy MicroStrategy or just buy all the shares of MicroStrategy. So they are owning Bitcoin through MicroStrategy and not directly on their balance sheet. Maybe this is a thesis, maybe it isn't, I don't know. But this is a risk when people are saying, well, if they want to keep buying MicroStrategy at a premium, there's nothing wrong with that. It's like, you see nothing wrong with that. But at the end of the day, the banks, they can handle this long-term bleed. You and I can't. Because if our portfolio goes down by 40%, 50%, 60%, a lot of people are going to feel really screwed, right? Especially if the price can never recover. The banks can do that and not even sweat, right? They can drop 40, 50% because they just have continual liquidity from the Federal Reserve. Anyway, Simon Dixon said that's not how they operate. Banks build a multi-front leverage machine designed to entice you into borrowing against your Bitcoin. Central banks use interest rates to trigger market shocks. Hedge funds tap into credit lines from institutions like the Bank of Japan. Derivatives are deployed to inject volatility exactly when it's needed. This is something that we talked about for a long time on this channel. People look at derivatives, futures, options, spreads, all these type of other products built on top of the underlying asset. They view these as good, but I explain on a regular basis, the derivatives can control the price of the underlying asset. It's supposed to be the other way around, but they can control it. So if the banks are in the derivatives or they start shorting a stock and the market doesn't understand why it's being shorted and doesn't know that the bank is actually shorting it, this can create panic and then people to sell and then more liquidations and then more selling and then more liquidations and then more selling and then panic. And guess who wins in all of that? The banks, because they're the ones who effectively could have orchestrated it. Now, I'm not saying this actually does occur, but it wouldn't surprise me if it does, at least in certain situations, right? Simon Dixon continues saying, when a black swan leverage event hits, the lawyers move in using Chapter 11 not to protect, but to strip assets, marking your Bitcoin down to bargain levels. That's when private equity steps in, offering you dollar crumbs while they scoop up the real upside, your Bitcoin. And in my view, what Simon is explaining here is exactly my concern with GameStop. Because there's a lot of retail investors. These are not very wealthy people for the most part, right? These are just everyday people who are working very hard and see these kind of trades, these Wall Street bet trades as a potential to get rich. I understand it, but they don't understand the risk. GameStop has no business. They have no business model. Their business model is a retail store that sells video games and you could trade your old video games in for $1 and then they're going to sell it for $15, right? Nobody's using this anymore. You can use Facebook Marketplace. You can buy the game straight from the console. You can ask your friend for the disc, right? There's so many other ways to do it now that their business model is a failed business model. It's similar to Blockbuster, right? It's just a changing of the times. And instead of GameStop changing the way they do business, maybe creating a coffee lounge where you can play video games in the store, right? Get people in there, get a little bit more business generating and stuff like that. I don't know. I'm just throwing out an example. They've done nothing. So their last ditch effort is buying $1.5 billion in Bitcoin. And everybody's cheering this on in the Bitcoin community. Oh yeah, GameStop, buy the Bitcoin, GameStop's buying Bitcoin. I'm like, guys, GameStop is a failing company from a business strategy point of view. Like their business model is not going to continue to be successful. This is a last ditch effort. And so all the people who are buying the GameStop shares, if the company goes bankrupt, they're the last to get paid. And guess who's going to get that Bitcoin that they have? The banks, the hedge funds, the big money, and you get screwed. Now, I'm not saying this is going to happen, but as an investor, we have to understand the risk, and that is a risk. It's not just a risk for GameStop, it's also a risk for MicroStrategy. Now, I think the risk is less with MicroStrategy. You know, it may actually be at the point where MicroStrategy is too big to fail, where there would be some type of bailout. But you know, we're not there yet. But we definitely have to think about the risk, even if it's not with MicroStrategy, maybe with 21, maybe with MetaPlanet, maybe with GameStop, maybe with Marathon Digital, all these companies that are buying Bitcoin. Anyway, Simon continues saying every actor in this system, the banks, the hedge funds, the lawyers, the regulators, they all work for the same financial power structure. It's a tightly integrated financial industrial complex. And make no mistake, they want your Bitcoin. This isn't a quick play. It may take years to unfold, but the machinery is already being set in motion. It's the American model, engineered by the very banks that own the political system, including the ones behind the current president, greased by the same lobby money that shapes both parties. Whoa, whoa. So yeah, I mean, Simon Dixon here, I think he has a point. And I don't think that a lot of people are thinking about this. We talk about this regularly on the channel, right? The leverage, the over leverage, the risk. And the more risk that we see, the more upside potential we have. Because remember, no risk, no reward. More risk, more reward. Low risk, low reward. And so there is a potential we're going to go much, much higher. But as we go higher, as more institutions start buying, as GameStop buys, as MicroStrategy continues to buy, the risk keeps increasing. And at some point, that risk increasing will decrease. But when it decreases, the risk factor, the black swan event, would have probably occurred, and we would be in a bear market. That's how these cycles work, guys. It's not me wanting this to happen. It's just how the cycles work. I was in that first downturn in 2018. Bought in 2017 at the top of the market. 2018, the markets came crashing down. I'm like, what the hell's going on? I thought that Bitcoin is going to be the future. Well, it is, but it takes time, right? So here's another tweet where Simon Dixon says, Bitcoin on an exchange is not Bitcoin. A Bitcoin ETF is not Bitcoin. Bitcoin on a company's balance sheet is not your Bitcoin. Bitcoin borrowed against is not Bitcoin. A futures contract is not Bitcoin. Bitcoin is your private key. That's it. Now ask yourself, do you truly own enough Bitcoin? If the answer is yes, sit back. Let others swim with the sharks in murky waters while you relax on the beach, watching the beautiful fish safely in the coral reef. Effectively, what he's saying here is, don't get caught up in the hype. Don't get caught up in the leverage. Don't get caught up in these companies that are promising you to change the world, right? Maybe they will. That's fine. Maybe they will. But I have the same thesis about crypto markets, right? I'm not looking at what these projects could potentially do 5, 6, 7 years from now. I'm looking at what they can do today. Because if they have the technology today, there's very little doubt in my mind that they will continue to develop the technology and probably have even better technology in the next cycle, and the next cycle after that, and 10 years from now. And so I'm looking at what these projects are doing today, not what they're promising to do, right? These companies that are promising the best Bitcoin type of product in the world, we don't know this yet because these are brand new. We don't know if GameStop is really going to be able to get saved by buying Bitcoin. And this could be really negative if GameStop buys the Bitcoin and then goes bankrupt, because all these other companies that are waiting on the sidelines to see what happens, they're going to see GameStop went bankrupt and then had to liquidate everything. And people are going to be kind of nervous about getting into other companies, and it's going to take time to heal from that. And so this could put us in a prolonged bear market potentially, right? But leverage is the key. Leverage, leverage, leverage. It took down the market in 2018, took down the market in 2022, and will probably take down the market here as well. We see this happening over and over and over. Anyway, Leverage McGee said on X, he said, "Dear MicroStrategy holders, you're getting bent. Michael Saylor needs to sell more common stock, which he knows the shareholders won't like. Therefore, he disguises it in a 42-42 plan. Despite having $20 billion of unsold preferred remaining stock from the previous plan, why not issue it all? Effectively, MicroStrategy just recently talked about raising $42 billion more from their selling shares on the open market, and also $42 billion by selling these preferred stock. It's like a derivative of the MicroStrategy stock or whatever. But effectively, there's a cost to the preferred stock that they have to sell, right, directly to shareholders versus selling common stock, right? Common stock is what is on the open market. And so remember, back in January, MicroStrategy increased their shares from 300 million shares to 10 billion shares. That 30x is all going to be sold on the open market and taking that money and buying Bitcoin with it. But in my view, that's a dilution on the price, dilution on the other shareholders. And so what he's saying here, Leverage McGee, is that, yeah, they're going to have to do this. They're going to have to sell shares in the open market, but shareholders don't like that because they get diluted. So he says that they're disguising it as a 42-42 plan, where they're not just taking out $42 billion in selling shares in equity, but they're also going to raise money in $42 billion in fixed income. But remember, fixed income carries a cost. He said, anyone who knows basic accounting can see the grift. The answer is that Michael Saylor can't sell the preferred stock because it costs 10% interest, and there's negative cash flow from operations, which of course would be a Ponzi. So to avoid the Ponzi, Saylor has no intention, according to Leverage McGee, of selling $42 billion in fixed income products. It's all going to be common stock, which has zero cash cost for the company, and tiny little drops of preferred or converts to keep the fanboys hopeful. Anyone who thinks this is going to be one-to-one, I have a bridge to sell you. And effectively, this kind of goes in line with what we've been talking about, right? Why does Michael Saylor have zero MicroStrategy stock, but he owns the Bitcoin? He is playing a very interesting game here, guys, because he owns Bitcoin. His company owns Bitcoin, but he doesn't own the company. He owns Bitcoin, right? So think about that. You own Bitcoin, and then you have a company that effectively is pumping the price of Bitcoin and reducing the supply available of Bitcoin. So what do you end up doing for your personal bag of Bitcoin? You start pumping it. It pumps, right? The price is going to go up because there's less liquidity in the system. There's constant purchasing. And granted, you don't have any of the risk associated with the debt of MicroStrategy. So yes, holding Bitcoin is the premier, investment compared to MicroStrategy. You can hold Bitcoin and be the biggest MicroStrategy bull in the world. That would still benefit your Bitcoin holdings, right? So any way you look at it, what MicroStrategy is doing could benefit Bitcoin on the uptrend. But if we go below the average cost, then what happens, right? If they can't keep selling more shares on the open market without diluting the price of the stock, then what's going to happen? And so as you guys can see, there has been major risk in companies back in a few years ago. And a lot of people already forgot about the risk. A lot of people have already moved the goalposts, saying, why are we only at $96,000? Bitcoin isn't moving. We're in a bear market again. And it's like, wait, we're at literal all-time record highs. How could Bitcoin be a bad asset when we're at all-time record highs? It's just the goalposts have been moved. People have gotten used to this $90,000 price, the $100,000 price, and they wanted to keep going higher. But that's not how the markets work, right? You have to play on the volatility. And as we say on this channel, buy the dip and sell the rip. But there's going to be a lot of people that buy the rip and then on the dip sell because they get panicked. That's not how to invest. And really understanding all of this that we just talked about should be giving you a better understanding of the risk profile of Bitcoin, especially with all of the excitement around all of this Bitcoin buying, all of the pro-crypto legislation, the pro-crypto administration. But I would definitely recommend don't let MicroStrategy and Cantor steal your Bitcoin. Go watch this on Simon Dixon's channel. It's about a 50-minute video. And he goes very in-depth. We obviously didn't go through the whole 50-minute video, but I do think that a lot of the points that he has are valid and accurate and something that we at least need to consider Because if we're not considering the risk, we can never get the reward. Hopefully you guys enjoyed today's video. Don't forget to give the video a free thumbs up. Check out my other videos on the channel. If you want to help support the channel, click the join button down below to learn more about becoming a channel member for as little as $1.99 a month. Thanks to everybody who is a channel member. Thanks for watching. Thanks for giving the video a thumbs up. I'll see you when I see you. Crypto on.